Good afternoon, ladies and gentlemen, and welcome to the Beeks Financial Cloud Group PLC investor presentation for the financial results for the year ended the 30th of June 2021. Throughout this presentation, investors will be in listen-only mode. Questions are encouraged, can be submitted any time via the Q&A tab situated in the right-hand corner of the screen. Just click Q&A, scroll to the bottom, type your question and press send. The company may not be in a position to answer every question received during the meeting itself. However, the company review all questions submitted today and publish responses where it's appropriate to do so. These will be available via your Investor Meet Company dashboard, and you'll be notified once they're ready for your review. I'd also like to remind you that this presentation is being recorded. Before we begin, we'd like to submit the following poll. Excuse me. I'd now like to hand you over to Gordon MacArthur, CEO, and Fraser McDonald, CFO of Beeks Financial Cloud Group PLC. Good afternoon.
Thanks, Paul. Good afternoon, folks. Gordon MacArthur here.
Good afternoon. Fraser McDonald, CFO, also in attendance.
Okay, folks, so I'm going to go through the first few slides and we'll hand over to Fraser to go through some of the financials. So, first slide is just really a positioning slide. So, the business is now 10 years old, being a PLC for 4 years now. We believe we're the largest pure play cloud provider in capital market space. With the growth over the last few years, we're getting towards, including some kind of contracts resource, we are just over 100 people globally now around the world, ISO certified as of 2 years ago. So if we slip to slide 3. So I'm kind of going to not spend a huge amount of time on positioning the business and get more into the results, because I'm assuming that a lot of the people on the call have known us for some while. So Beeks is a cloud computing company, specialises in capital markets or financial markets. We provide compute, connectivity and analytics solely to financial services clients. We, as I said before, we're now 10, 11 years old. We have historically always been a 95% plus recurring revenue model business. That will change a little bit going forward with the advent of Proximity Cloud, which we'll talk about later. And we also have a software-only analytics offering, which is not recurring in its nature because it's software, but we'll cover that. Fraser will cover that a little bit. I think anyone that's listened to any of our calls or looked through any of our information over the last few years will understand that the majority of our business is institutional clients. We do have a small retail division that was really legacy, the start of the business back 10 years ago with the VPS side of the business, and we acquired a couple of smaller competitors. That retail business accounts for 11%. Not particularly important to us. It's just the legacy business, and the focus of the business has been for many years now the institutional segment. Revenue is kind of widely spread around the world. UK is actually the biggest portion, followed by the US, mainland Europe, and then the rest of the world. So let's go to slide 4. So again, this is kind of, anyone who's followed us for a while understands this is a kind of well-worn map for us. We've had it in all of our slides for the last few years. So I think at latest count, we're around 21 data centers around the world. Over the period, we've opened up and expanded in Australia. We made an announcement with ASX about 5 or 6 weeks ago, I think, about putting our cloud into the Australian Stock Exchange data center in Sydney. And we also have expanded in the year into Toronto, with one particularly large client who has put 2 data centers live in Toronto over the last few months. So 21, London is by far and away the biggest physical deployment for us. We've got 4 or 5 sites in London, with some of the largest environments, followed by New York and then Chicago. So, and the dotted lines between the data center location shows the Beeks backbone. So we have, and historically have always connected up our data centers with low latency connectivity so that clients can send market data or trade information between their sites on our cloud POPs around the world. So slide 5. Again, we we have talked for the past 12 months about the period being the year of product, and we're pleased with the progress made there. So 2 major products released: Beeks Analytics, a SaaS platform, so it's available in New York and London, which was us taking the Velocimetrics software product that we acquired about 18 months ago, making some investments in it, some changes to the underlying technology, and making it available via the Beeks platform for clients to consume on a month-to-month as a service. That was available from around January, February last year. We have a number of clients on the platform, and we will continue to grow that product offering out. So, in terms of touching the numbers, and I'm going to spend a bit more time on Proximity Cloud as we go through, because that's our kind of landmark product, and really the future of the business. So I'll spend some time on the slides dedicated to that. But the numbers, so we had a 24% growth in revenue in the period. So I think historically, since we've come to market, we have been fairly consistent between 20 to 30% revenue growth each year. And we managed to hit that figure again. Law of averages, as the numbers become bigger, then that becomes more challenging. But as I say, we've historically always hit that figure. The committed monthly revenue, which is our key metric that we've always measured at the board level, was at 13.8 at the end of the period. I think if you've seen the trading update from yesterday, you've seen that has gone up to 50 million in September. So we've continued. We've had a really good first quarter. Again, we'll spend a bit more time on that. So we continue to land and expand in our tier 1 clients, and tier 1 bigger institutions has been the focus of the business since IPO. We have been successful. We have won a number. We're in discussions with many more, and almost every tier 1 client that we have, successfully won, we have grown after the initial deployment. So that's a core part of our strategy, is not just to continue to win new logo accounts, but to take more market share as we enrich the product offering. So Proximity Cloud, we launched about 6 weeks ago as an available product. It's really 18 months of hard work, and really the future of the business. But as I say, I'm going to spend a bit of time on that further in the deck. So again, I would hope that most people have seen our trading update yesterday. Record quarter for us, and most pleasingly is a few things. Summer is usually our quietest period of the year. We kind of usually write it off as a bit of a nothing period, as a bit of a strategy, tidy up various bits and pieces within the business. But it's been our biggest period of signings ever, with around 5 million of TCV, and equally pleasing was it was across a range of services. So our biggest ever contract by a partner for a large European bank for a large private cloud rollout within the European region. That will expand to the rest of the world next year, we hope, as we successfully roll out the European part. We secured a largish analytics deal with our tier 1 bank for a deployment in in Asia Pac. And most pleasingly, I think we secured the first contract on Proximity Cloud. So as we've been building out the product, we've had a couple of beta partners working in that final stage of deployment and testing feedback, and one of them has committed to $1 million contract, and the first Proximity Cloud has been delivered to them in a London data centre. So again, kind of pleasing for the strategy in that it's covered 3 different areas of the business that we have built out product, we've acquired product, and our core private cloud offering, which we'll continue to focus on going. EBITDA has creeped up, as an ACMMR likewise. We'll move on to the next slide, number 6. So the business has evolved, and you know, I think it's worth spending some time here. So, you know, day one, or you know, the early years, Beeks was VPS provider before it was called cloud computing. Right, we specialised in providing retail cloud instances, if you like, to retail brokers who white labelled our platform. We still do it, as I said, and that's still the domain of individual traders looking for small amounts of resources in strategically important data centers. So we call that a kind of public cloud environment. You know, over the last 4 or 5 years, we've been doing much more private cloud. So private cloud is still hosted by us in our spaces around the world, with a variety of dedicated infrastructure depending on client requirement. Could go from this dedicated compute resource up to a fully dedicated environment that is only accessible and used by a particular client. And then proximity cloud, private cloud is the domain of mid-market and, you know, kind of some tier 2 organizations, maybe, you know, some larger clients would go down that route, and proximity cloud is certainly a tier 1 play, which matches into your strategy. So we're calling it the 3 Ps: private, public, and proximity. So proximity clouds, when explaining it, it sounds like it's not that different from what we've done before, but you know, we have tweaked the way that we're delivering a service to a client. So for the last few years, we've had lots of conversations with lots of big organizations, and you tend to have these line of business conversations, and they love the speed, they love the agility that we can give them with, you know, real capital markets cloud infrastructure in a private environment in our spaces. And then you get to the security teams, you get to the compliance teams, and because it's under our security model, because it's our engineers that are accessing the systems physically and logically, it's still a big problem for the largest entities out there. And for the last few years, we've been trying to come up with a way of getting around that and putting the control into the hand of the institution. So proximity cloud does that. So proximity cloud is a pre-racked, pre-installed, pre-configured environment that gives you a full Beeks private cloud with all of the IP that we built up over the last 10 years, low latency network, low latency bare metal servers, you know, the operating system is all stripped back and, you know, optimized for trading infrastructures, virtual machine pool for, you know, dev, UAT, testing, storing market data, analytics within that rack, giving you, you know, full latency monitoring and market data, trade life cycle analytics in a rack, pre-configured, pre-built, delivered to a client site. So this is the change. We do not host. We can host these environments, but we don't expect to host that many of them. You know, if you look at the biggest banks in the world, they have their own cages and spaces in all of these financial data centers. Proximity Cloud allows a bank or an investment manager, whoever it is, to consume our services on a month-to-month OpEx with real-time orchestration, spinning up and managing the resources to meet, you know, demand of the business, whatever it may be, month-to-month basis in their space under their own security model, managed by their own security processes and accessed by their engineers. So a lot of the security questions and security issues that banks, you know, have very prevalent in their mind is taken out of the equation. So again, it sounds not that big a change, but you know, we are the only people that will give you our capital markets optimized private cloud engineered environment that you control and manage yourself. So they get a Beeks portal, they can deploy infrastructure, they can see full visibility of the stack, and they pay a month-to-month cost for the compute that they order. That can scale up and scale down depending on the contract. Has a slight impact on our commercials. They're all long-term deals, and Fraser will go through that as he's talking about the kind of the numbers side of the business. So we spent a lot of money on building this and changing our platform, changing our systems to allow this version 1 of the product. We're already lining up version 2 and 3. Believe we're ahead of the game, having lots and lots of conversations, inbound inquiries, a lot of sales activity, a lot of proof of concepts. And we believe this is the future of the business. This is what we think will take us beyond, the current forecast to, we hope, multiple times the size of the current organisation over the next few years. And we will continue to invest in it quite heavily. So the next slide, slide 8. Sorry, I've talked through slide 7 without going over it. So slide 8 kind of just positions us. There are the hyperscalers have got on-premise cloud offerings, but technically they don't work for capital markets. They don't support the data types that's needed. There is no low latency versions of them. The big hyperscalers are trying to sell to every industry in the world. We are not. We have fully optimized the entire stack for capital markets and trading environments. So we're out there on our own. Even the competitors in our space, we believe we're really the only cloud provider in the space. There's managed service providers out there that like to put a cloud against their name, but there's no one anywhere near our capability. So it's a bit of a unique offering, and we're proud of the product we built. Done a lot of demos over the last 6 weeks and a lot of positive feedback from our customers. So I'm very happy with the team and how they've delivered it to market. It's now down to sales execution. Just the last one on before I hand over to Fraser to talk through the numbers. So this is a kind of example of we've always talked about winning big accounts because the ticket sizes are just night and day bigger than we are used to. And again, I always caution investors and people that think that you just walk into these accounts and they hand you the keys to the kingdom on day one. It doesn't work like that. So every big organization tends to work the same. As a new vendor, you get through the onboarding process. There's a project for you to do. That tends to be a smaller project. And I think if you look at the slide, the graph on the right is one of our bigger clients' customer journeys, and we signed them on last January. So we've had it for about 18 months or so, and the client started on a relative, it was a decent sized commitment, and we gradually rolled it out, and that contract is now worth a couple $100% of its original contract size. They started at $1 million. And we are now at 3.7 after 18 months. I mean, we expect that to continue to grow. So that is all about getting the first project, getting through the onboarding process, and delivering the project. Right? It is pointless to overpromise and underdeliver. To take projects that we can't do. You're given a test, and it's the same on every other account that we're involved in. If you pass the test, if you deliver the first smaller project, you tend to get larger share of the wallet within that organisation. So it's not just about the sales process. We are as a business absolutely focused on delivery, and we've always said, while you do get negotiation on commercials, our business lives or dies on quality of service. So we continually focus on ensuring that we are delivering to client demands. So I think I'll hand over to Fraser now, who will talk through a bit more of the numbers.
Okay. Thanks, Gordon. So I think in terms of FY21, so those of you that follow us will understand that we did call out this year as a year of investment across product, people and operations, and particularly around product. So Gordon mentioned the two major product launches we've had during the year is Analytics and Proximity Cloud, which is just post-year end. And in terms of what we've invested, we have invested this year double what we've done over the last couple of years. So actually FY21 investment has been more than 19 and 20 put together. In terms of Proximity Cloud, about £1.5 million has been invested. A lot of that is internal staff costs because we have a sort of build strategy. It's quite a unique product that we have built. So Gordon mentioned we're almost 100 people year end. We're about 80, and of that 80, we now have about 24 developers who are building out these products that differentiate us within the marketplace. So again, it's been, as I say, it's been a major investment in product and people. In terms of our infrastructure as well, we've spent significant amounts, 4.7 million compared to sort of just under 3 million last year. And in terms of how that's split up, so just about £1 million into Proximity Cloud, and that's really the sort of first 5 Proximity Clouds, of which, as Gordon says, we've sold one already, just up over a month after launch, which is good, and we have pipeline across the other ones as well. In terms of that other capex investment, the 1.6 million, just again to facilitate some of that tier 1 growth that Gordon talked about in the previous slide. A lot of our investment is on the growth. So in terms of maintenance, we're just under 20%. So quite a lot of that capex is facilitating growth. Next slide, please. Again, in terms of our income statement, so just looking at some of the key financial metrics, we kind of said at half year, we are 24% up in revenue over the year, which I think is a decent year. We had some slight challenges. Whilst COVID didn't really fundamentally affect our business, it did slow down some customer decision making, and also when we sign a customer, we don't actually get to recognise the revenue until that infrastructure is deployed within one of our 21 data centres, and we did have some access to data centre issues during the kind of peak times of lockdown, but that's now easing off. But it did have a slight impact in the year, so it's pleasing that we've still overall grown the revenue by 24% in spite of that. And again, those who follow us will understand that our model is fairly consistent and repeatable. So our gross margin for the year, 50%, similar to what we've achieved over the last couple of years. There is a cost of what we do in terms of infrastructure. So quite a chunk of that cost of sale goes in our, the depreciation on the infrastructure that we buy and the cost of the data centres. In terms of that mix going forward, it may change slightly. Gordon mentioned we do have software elements to the business now as well, but just now, as it stands just now, the vast majority of that is the infrastructure sales. And then just coming down to operating profit, so PBT, we've still grown the business, which again, is pleasing. So 13% growth at PBT level, in spite of all that investment. We see a slight reduction in operating margins, in light of what we invested over the year. We've said before, our model, Gordon mentioned earlier, isn't particularly price sensitive, but will always be sort of, peaks and troughs in terms of margin changing by a couple of percent, fluctuating depending on our level of investment. Okay, next one. Thanks, Gordon. Again, just following on from cash, so being a recurring revenue model, you can see that the operating cash flow has grown, so £4 million, which is up 35% on previous year, 5 million overall when you allow for some working capital movement. And then similar again to prior years, we have reinvested that and more in the business. So we've spent 6.7 million that I referred to in the previous slide. You can also see the Velocimetrics business that we acquired last year. There was some deferred consideration in a year one earnout, so there's an extra £1 million in that. So of the 5.2, we've invested 7.7 back into the business. We've changed banks during the year. We've got additional flexible finance facilities to allow us to flex up and flex down as required. We've now got that RCF facility. We're still relatively low in terms of gearing, so we're 0.4 times EBITDA. We actually bought a purpose-built head office, so we've increased our debt slightly, so we're about 0.7 times EBITDA now, but we're still relatively low in terms of gearing, and we in April we did an equity raise of just over £5 million, which was the kind of initial raise to help support the Proximity Cloud offering. So overall, in terms of cash, we're £2 million higher than we were at the end of the year, with 3.3 million remaining. Gordon touched on this earlier on. In terms of our balance sheet, the Proximity Cloud model is slightly different to our traditional model. So there's a higher capex investment on those types of private proximity clouds. So the payback's about 13 or 14 months, which is about double our traditional. So we'll keep an eye on that balance sheet, because the deal sizes in proximity cloud can be significant. So but as I say, we are relatively low in terms of gearing, and for the foreseeable future, certainly. In terms of our forecast, we really have immaterial cloud proximity in there just now. So that's just something in terms of to point out, those of you who follow us. If you look at the consensus, our revenue for this year is about 17 million across the consensus, which again we believe is relatively prudent given some of the deal sizes. Gordon mentioned we exited at 15 million with some one-off deals in there as well, to the tune of $1 million. So we're in a good position really at the start of the end of the quarter, which again, as Gordon says, is a relatively quiet period for us. So good start to the year.
All right, thanks, Fraser. So just to kind of close off, and then we'll go to Q&A if there is any. So the priorities for next year. So we've invested in the sales team quite heavily in the US and Europe. I think we mentioned last time that Asia Pac was still the next area for us to look at. That we've got a growing cloud deployment in Asia Pac, so we're currently looking for someone to manage that business from a sales point of view. So there's expansion in Asia Pac for the next year, and Proximity Cloud is the biggest thing we've ever done, and the biggest opportunity the business has ever had in front of it. So we are absolutely focused on driving and closing Proximity Cloud deals, before the end of 2021 and into 2022. And as I said earlier, there's a really strong pipeline, strongest pipeline we've ever had, attached to a lot of it attached to Proximity Cloud. We've always worked in the partnership model. We see a lot of business from referrals, from exchanges, from liquidity providers, whoever it might be, technology providers. So again, a key priority for us is to expand the amount of people that we partner with and work with. And we will continue to grow headcount. I mean, we're never going to be thousands of people. I think we're 20 or 25 extra people over the next 12 months, but subject to revenue coming in. So that will continue to expand. And in order to support that, as Fraser mentioned, we have bought an office in Glasgow, just not far from an existing office. So it might seem a strange thing to do, buy a building, given our we're in expansion mode and growth mode. But I think if we were kind of getting to the realms of possibility and the current space we were in, we were spending about 17 grand a month, I think it was, on that rent. So over the period of 10 years, we're going to spend a couple of £1 million on a space that was too small, that wasn't ours. And then a building came up that was a next into building, not far from us, and we bought it for 2.1 million. That gives us the ability to grow a couple of hundred people extra. There is actually some revenue, some rental income. There's a couple of small companies that rent a small part of it, not a material amount of money, but it was just a no-brainer. That one of the problems, it's not like London, there is a limited amount of decent office buildings in the areas in Glasgow that we were interested in that we could get. So when this came up for the price, considering we would have spent it on rent, it was a no-brainer to buy it and have it as an asset within the business. So that transaction has gone through. We're hoping to move in February of March after doing some fit out and moving some of the tenants around in it, because they take about an eighth of the space, and we're happy to let them be for the time being. Slide 14. So just a kind of summary on the outlook. So again, not to overplay this, but by far and away our best quarter ever, and historically our weakest period. With non-recurring revenue, and non-recurring revenue, we are going to, as we over the next few periods as we report, we will strip out non-recurring revenue and ACMRR, because Proximity Cloud and software will contribute to non-recurring revenue. So we will ensure that as investors you have full visibility of what's occurring and what's not. But because of Proximity Cloud recognising some of the revenue on day one, because the client takes title of the asset, then that should become a bigger number going forward. And the focus is now this year is continuing that product development, investing in the people, but sales execution now. We think we're going to have a landmark year. I hope we're going to have a landmark year, breakthrough year. So it's all about focusing on that sales execution, breaking into some of the big accounts that we have been talking to for some time and converting that into revenue. We have, for the first time ever, I think, upgraded the consensus from the analysts as an upgrade on full year revenue. The profit number has remained fairly constant despite the revenue uplift, and that's because we think over the next 12 months we have such a large opportunity with Proximity Cloud that we're looking to continue the investment there to get version 2 and version 3 out quicker than we would be able to by continuing the current course and speed. So as we just believe that if we invest a couple of £1 million this year, it will stand as a good space for the next 2 to 3 years to be way further ahead of the competition. So again, still another year of investment, but all about sales execution. And as Fraser says, doing the maths, at 15 million exit run rate at the end, in September, with just about 1.2 or 1.3, I think, of revenue already recognised. We're not at the consensus of 17. We're not. Any material deals, again, will take us above and beyond, we hope, that consensus forecast. So we hope this is our biggest year ever.
Fantastic. On that note, that's a great way to end the presentation. Gordon, Fraser, thank you very much indeed for updating investors today. Ladies and gentlemen, do please continue to submit your questions using the Q&A tab situated on the right-hand corner of the screen. But just while the company take a few moments to review those investor questions submitted already, I'd like to remind you the recording of the presentation, along with a copy of the slides and the published Q&A, can be accessed via your investor dashboard on the Investor Meet Company platform. I'd also like to remind you that your feedback is important to the company, and immediately after the presentation has ended, you'll be redirected for the opportunity to provide feedback in order that the company can better understand your views and expectations. Gordon, Fraser, as you can see, we've had a number of questions submitted by investors, and thank you to those attendees who have submitted those. If I may just hand back to you, just click on the Q&A tab where appropriate to do so. If you could read out the question and give your response, that'd be fantastic. Thank you.
Oh, sorry. So sorry, Paul. Forgive me. Where's the Q&A tab? Well, I can't see the Q&A. Is there something we should be clicking on?
So sorry. If you hover your mouse over the slide deck, just make sure it's not in full view. And can you see a little white pane next to the slides where it's got chat, Q&A and polls? Or if not, if you see a little blue speech bubble at the bottom, just click on that to expand. Yeah. If you've got that there, Gordon, just click chat, click on the Q&A and you'll see the list of questions come through.
Okay.
You got it there, guys?
Got it, yeah.
Fantastic, thank you. If you could just read the question where appropriate to do so and give your response, that'd be great. Thank you, Gordon. You've passed the test for the afternoon. Thank you very much.
I'm a technology guy. So, I mean, sorry, just looking at the question from Chris R. So, how can you penetrate for the tier one? So, I mean, it's building out product sets that are relevant to them that allow them to procure services from us. So, as I said, I think as we said throughout the presentation, Proximity Cloud just gives, the people who say no less excuses to say no, from a security and a compliance point of view. So it's now about going and having as many conversations with as many of these large banks, brokers, exchanges as possible to ensure that we are getting in front of them and they're aware of what we do, because still a lot of them are, we're still a bit of an unknown to some of the bigger guys, but that's now the job of the sales team to do that education process. Simon, do you compete with Ion and Fidessa in any way? Not really. Ion Fidessa is a massive organisation. They're more in the application space. They do have some infrastructure capabilities, but they are trading applications, and that's not our bag at all. So I wouldn't say that's any. We don't come across Ion and Fidessa as a competitor in everyday business. Next one from David. Proximity Cloud is targeted at a large global market. Do you have an estimate for the total addressable market? We get asked this all the time, not just about Proximity Cloud, but the answer is no. There is no, you can't go and pull a Gartner report on something like this, or an analyst report on what do banks, hedge funds, brokers spend on infrastructure. It's a very big number, but there's generic cloud computing numbers out there. The analysts will tell you that it's going to grow 40-50%, and it's hundreds of billions. A single large bank will spend $100 to $150 million a year on a trading infrastructure. Multiply that by, 20, 30 big tier ones out there. It's a large number, but I don't have an exact addressable market value, I'm afraid. David, so will Proximity Cloud be displacing a client's existing infrastructure, fresh solution? It's a good question. Both really is the answer. So we've seen a lot of use cases where large Western, kind of European and American banks are looking at deployment in Asia to some of not the smaller exchanges, but the smaller countries. We've had conversations about Taiwan, Korea, where they don't necessarily have the staff and the office infrastructure that would support an existing environment. And then you get larger footprints that need refreshed, and clients are getting driven by boards and what have you to move to an OPEX type of model. So a bit of both to answer that question. Terry, why don't you get more levered?
I think we do have access to more debt, and I wouldn't rule it out because the opportunity in the Prox Cloud, we're not going to not deliver these solutions for lack of cash. So if we need to get more debt, more equity, we won't do it.
All right, Michael, how quick do you expect to see closing Proximity Cloud deals? It's a small commitment for an organisation on day one, right? Entry level is kind of 10 to 15k a month. However, they do move slowly. I have my expectations that we will certainly sign business before the end of the calendar year. Sales team have been driven by that, but again, we're in the onboarding circle with a lot of larger organisations, which we have very little control over. David, whom are you seeking operational partnerships? Technology providers, exchanges. The Proximity Cloud works very well as an exchange cloud, right? So you can't have an AWS instance in the whatever data center, the exchange data center. we're having some conversations with exchanges about them white labeling the platform to run in their exchange to offer easy access to buy and sell side within that exchange data center. So big target of the exchanges. Technology providers has actually been one of our biggest revenue drivers. So, people in the application space in the world who don't want to do the underlying infrastructure platform. So these are the type of people that we're looking at for partnerships. Will the head office acquisition put pressure on short-term cash resource?
No, I think, so we've, as Gordon says, we purchased the office, so it was just over 2 million, and we did take some bank debt, so it's about half a million in terms of our existing cash, so not a huge amount.
Ray, on what features are targeted Proximity Cloud version 2 and 3? Are they driven by current client requests? Yes, yes and no actually. So, we've still, analytics is available as part of Proximity Cloud, but currently it's a separate UI. So there's a lot of work being done to mesh the two UIs together so that you get the analytics as part of the inbuilt user interface of Proximity Cloud. So that's one big thing for clients. User management, alerting, network automation. And we are picking a lot of these up with clients as we go through the demo POC type cycle, who will suggest things that, I'll ask questions, does it do X, Y, and Z? And we then make them as future requirements. So we've got a very rich roadmap going forward for the version 2 and 3. Do you have a vision on which you can share where revenue could be in 2-3 years' time? No, I do, but I'm not going to share it because then people just will, have that in their heads. I mean, we expect significant growth in Proximity Cloud, but can I give you an exact number? Very difficult to do. Ray, you said you'd expect expanding capex and building 5 Prox Cloud system, but also only sold 1 currently. Are the other 4 tied to specific client prospects? Yes, they're all currently under proof of concept, and we have starting to order more. Prox Cloud has higher upfront capex. Do you have the resources to grow as fast as your prospect list will allow? Do you need additional finance?
Yeah, I mean, I think we've possibly answered that. I think, in terms of our current balance sheet, given what we think and what this will be, then we would probably have to go back and get more either debt or equity. But again, it's a good problem to have.
Thierry's asking, do you think there are other verticals where you could apply your expertise? No. We are financial services. That's what we do. Ray, are the Q1 orders 5 million plus 1.3 or 5 million total? That is 5 million total, some of which is recurring, and we've stripped out what we were recognising as non-recurring and upfront. David, operational resiliency, regulatory requirements are a major thrust by FCA, ABA, and others. Is this a further opportunity? So we get involved in these types of conversations. We have clients who will ask us and use us to help design robust, resilient cloud infrastructure to support their core activities. So yes, it's part and parcel of, while we are not regulated by the FCA because we are not a trade execution venue, we have to be aware and work with FCA regulations with all of our clients. So does it give it an opportunity? The fact that we understand, work with it, can talk meaningfully with our clients about it, gives us an opportunity because we understand their world.
Guys, I thank you very much. You've answered every single question that's come through from investors. And of course, any further questions do come through, the company will have the opportunity to review those and will post responses where appropriate to do so on the Investor Meet Company platform. Perhaps before we redirect the attendees to give you some feedback, I may just ask you for a few final words before we wrap up.
Thanks, Paul. Yeah, I mean, I think to summarise, we're in a unique position. Our business has grown, has matured over the last 4 years in the public domain, in the last 10. We now have a unique product set focused on a niche area that is growing. that is unaffected by COVID, and we believe we're in a genuinely unique area where we have a value proposition different to anyone out there. So we have invested in the team, we've invested in the footprint, we've invested in the product, and now we are going to be focused solely in the next 12 months on executing from a sales point of view against the strategy that we've discussed today.
That's absolutely fantastic, Gordon Fraser. Thank you again for updating investors today. Can I please ask investors not to close this session? You should be automatically redirected for the opportunity to provide your feedback in order that the management team can better understand your views and expectations. This will only take a few moments to complete and is greatly valued by the company. On behalf of the management team of Beeks Financial Cloud Group PLC, thank you very much for attending this afternoon. That concludes today's session.